Okay, so let's begin. So we're looking at our list of questions, and we do have one here for Del Matias. How do you read the market going down today? Well, clearly not good. It just simply adds more evidence that we're starting to feel greater pressure. And the reason I want to point that out is because anytime the market shows greater amount of volatility, suggests to us that it's showing more vulnerability to profit taking. And given that particular context, what was earlier a very, very strong market might have to bend down, right? We were waiting for this to happen already in the last few weeks, and it was really only today that it managed to be able to get more traction to that. So I would anticipate we're going to see a lot more gyrations into it, and more corrections might be coming out into the next couple of weeks. So raise your defensiveness. Can we have the next question, please? Thank you. Last year, the PSEi also rallied early before eventually reversing all of the gains. How likely is the same scenario happening again for 2024? Unlikely. And the reason is because as we progress into a more bullish situation, the tendency for our market is to be able to establish higher low bases. So that's what I'm anticipating here. I don't think we're going to go back to the lows that we've seen in October. I don't think that will very rarely happen. Okay, there's another question by Wilbert. Is Puregold considered a good stock to buy this time? Okay, so I would when you say this time, I'm thinking at this time of where it is now, and right now Puregold is amongst the laggard stocks that I have. So I have not seen enough evidence for Puregold to be able to establish itself as a good support element just yet. But maybe if I do, please, some of you guys who know that I write the tech spotlight, if I ever see that Puregold comes to a situation where it's established an essential low and that the potential wider rally is coming through, then I'll be very much in my effort to be able to air it out for you so I can tell you when a good time to buy Puregold will come in. So thank you for that question, Wilbur. Next, please. Is long-term investment included in this present trading challenges by Musa? Well, since technical analysis is normally used to short to medium-term type of investment strategies, so the focus on the way I managed to be able to pull out today's presentation is really for the short and medium term. And that longer-term investment, I think I pictured earlier on, and I told you that on the longer term, I believe that Philippines has already hit a major low and that we are in a generally recovering wave already, or a more bullish wave. Now, that being said, it doesn't mean that we're not going to see gyrations along the way. And the reason for that is because we're still very early into a bullish phase. So yes, I'm still bullish despite the corrections that you're going to see. But in the longer term, I think that the lows have been established and that we are going to show more recovery down the road. So I hope that adds more value to the question that you had here. Thank you for this. Next. Okay, we have a next question here. All right, fine. ICT, it seems to continue to break out of 240 and continue to soar, currently at 315. May we have your take on which indicator to use and how to plot it? Okay, so let's go there. So let's call out ICTSI because, yeah, it is an interesting stock for us to be able to look into. So if you look at ICTS in this particular chart, let me just make sure that you guys can see what I'm looking at. Okay, so here, this is what ICT looks at of the moment. And so what are the indicators we can use to be able to guide us through? Like what I showed you earlier on, this uptrend line right here is currently what I'm using as my baseline. So as long as this does not break, then potentially you can hold this particular formation. Okay, so if this cracks to below 300, and that means that a wider corrective element will come. Now, along with that, if this were to break support, you will notice that your MACD here will also start to be able to turn downwards. right? And if that also starts to cross down, like the way it crossed down over here, then that also tells you and confirms that there is momentum loss and that the wider type of scenario is more likely going to come out. So you can use your trend line, your short-term averages, your MACD, all telling you that that your market is coming off of a relatively high side, that it is now more vulnerable to more profit taking. So that's one way for you guys to be able to establish a combination of different indicators to make sure that we can confirm our suspicion about the particular market. Okay, let's go back to our question pool. So it says here, what do you advise regarding EIP? Is it good to do it? By Romero. Well, yes, Romero, I think, the nice thing about the easy investment program, which uses cost averaging to be able to buy over the longer term, is that it removes the decision-making process from your end in terms of timing. Since it doesn't use timing and it is not a technical analysis tool, what you have to do is you have to make sure that the stock that you're buying is clearly a stock that has value, and you see recurring values are being shown, and such values over time should inherently become higher. And all you have to do, so you don't have to time it, is to just gradually buy it in the same amounts over a set period of time, and do it at a particular set framework. So the way an EIP works would mean, if you want to be able to buy a stock every month and you want to buy, let's say, 10,000 pesos of it, then you do so every month and just follow that religiously. You can say every 15th of the month you will do it and just follow it, no matter what the price is. And so, yes, as the price moves up and down, the job of that is for you to get a good average price on your purchases. And if that were to just continue moving higher, eventually your EIP strategy will catch up and keep you into a profitable stand. So, it's a good way for you, for those people who don't want to take the extra load of trying to understand the timing elements of markets. Just identify a stock that looks good, that has quality, and can show revaluation to an upside. I think it's very hard for you to go wrong. So yes, go ahead and use your EIP strategies. Next, please. How do we incorporate technical analysis on more medium-term trading? Do we look at monthly or weekly charts instead? That's correct. That's the way to do it. Good question, Mike. So I think in people who are coming around to be able to trade, the very first thing you do when you start looking at charts is you have to identify what is the period cycle of which you want to trade in. Now, you don't have, you don't have to be looking at charts every single day if you are taking a little bit more wider or longer term perspective into your view. But if, for example, you want to be able to look at longer movements, then yes, by your standard, a monthly or weekly, or perhaps I think a weekly chart can do. Monthly might just be too big for us to trade. But weekly charts can bring exactly to what you want to do, I think, in what you're asking from here. I also look at weekly charts every so often, just so I can see the big picture. And an advice I would give to many is that if, for example, you're looking at short-term movements and you see that it looks like your stock is going to come down in the short term, I think I want you to look at the weekly chart so you can see what the bigger picture looks like, so that you can see that this is not an issue that you want to let go completely, because you can see that the larger picture is still very much uptrending, although there might be a short-term counteraction. And that will now attempt to be able to water down your need to reduce your position from 100% to zero, because you know that your weekly charts are still telling you it's still A-okay, although there might be a short-term pause. Don't empty everything inside, because you want to maintain a position in that. But just to take a little profit, take 30 or 50% off. When it comes back to major support, buy back then. So yes, weekly charts are my preferred when I'm looking at medium-term trading. Thank you for that question, Mike. Is it good to buy Megworld now, or is there a possibility to go lower? Well, I think your second statement is more prudent, because I guess the question you're asking is that almost all the property stocks have managed to be able to climb in this recovery, but Megworld has not. And there's a few of the companies related to the owner here who are not really been doing too well. So it seems to be a laggard, and like I pointed out earlier, until I see major breakout from Megaworld's descending type triangle that I've seen, I'd rather not just say, okay, it's low, I want to buy it, or it's cheap and I'll buy it, because right now people are selling it for some reason. I may not know what it is. It's out of favor. Until I see that demand and favor come back to Megaworld and I see key resistance break come back, then I think I will stand back, because in that case there is a possibility for it to go lower. So I'll just be a little careful of that. Sorry for the negative view, but anyway, good question as well. Do you think second liners will start going up while index stocks are pulling back? Example like what happened to Plus today. Okay, Annalyn, my answer to the question is yes. You might see stock rotation in these conditions. And the reason for that is that what happens in a stock rotation is that people tend to sell issues where they're making money in, and with the cash that they have available, they raise from those profits, they will look to buy something else. Okay, so this is the reason why you have stock rotation, because from those profits, the cash that you raise, they will impute that to other interesting looking stocks. And this is what stock rotation does. And this is the reason why Plus has also generate activity. But to be fair with Plus, it's been moving relatively well even prior to the rallies of many. So it's had its own leadership in terms of doing that, and that's the reason it remains to be an interesting play. And I think you also will just continue to be able to trade that, because I think there is still continuing attention, not purely on rotation, but also riding on its own merit as well. Okay, but good observation, Annalyn. How about second or third liners? Do you think PLC is a good buy? By Patrick. Okay, so the consideration for this, I think it's best that we look at it, so at least many of you can also attempt to be able to tune into that. Some of you might not know what it looks like. DigiPlus, there we go. Okay, okay, so here's where the first breakout took place. Here's where the secondary breakout took place. So you could have bought this here, you could have bought this. Right now, you're a bit in the overbought side. So if you're going to ask me whether I'd buy right now, I guess I'd say no. I can hold something because I don't have a sell prompt just yet. I want this to park and maybe show 1, 2, 3, maybe a 1, 2, or 3 day pause, and then that might give me an opening for a new trade. But right now, I would hold this because potential upside over here is very much still intact. Let's just do a quick assessment. We're coming closer to the target though. It's target at 96, almost 970 as a target for DigiPlus. So just keep wary of that. Let me just check the other one. Let me just time to lines for you. Okay, this is in acceleration mode because it broke out of its channel. Okay, but nice breakout from the highs here. Okay, so let's see. Oh, okay, that's your next major resistance is at 104. So I guess you can use that as your projected potential target coming from the 89 where it is today. So very overbought. That could come down, but I'm thinking you probably see more upside over here, especially with some cash movement moving from stronger issues to second line favorites. This would be one of them. So you might get a little bit more of a stretch act in there. So 1 to 104 might be potential profit take areas for you. Can we have our next question, please? Okay, what is the short and long-term trend for the dollar? Okay, so I showed this earlier. I think in the short term, we have a little bit of a pullback trying to make a recovery, but it's inside a particular band. And the longer term part of the dollar, maybe we can just up. Okay, so if you have it here, so the short term of the dollar is this picture here. So a little bit of a recovery of a correction, but set within this band. between roughly 105 and 101 on the dollar index. The longer term picture of the dollar, and I mentioned earlier, I think we finished an A wave, we're in a B wave rally, and later on down the road, we might come back down into a corrective wave, into a C swing down here. So in the longer term, I'm a little bit more cautious here because I think there could potentially be a wider correction in the dollar later after it makes its decision on this band in this area here as well. Remember, if they start cutting rates, that also might drown down some of the attractiveness into the dollar as well. So that could contribute to some weakness that you might see. Okay, thank you for that, Christy. Next question. It says here, what is the trend reading for AP, Boytis Power, range or up? Well, it's up. Okay, let's have a look. Not exactly sure why trading views chart is a little off today because it's missing one. There we go. Okay. So I think you can clearly see it's up. It recently broke off from this area here. This is a breakout above 38.25. And ideally, just a stretch, just a little bit, and this should give me a target of, I think I placed it down here already, 40 pesos, a potential target for avoid this power. So after that, imagine the chart of SM. It might encounter some profit-taking resistance. I would suggest maybe you can do some lightening there, wait for prices to pull back maybe somewhere over here. And that would be a support area of about 38.50 to something closer to about 38.20 for about this power. Okay, let's see what other questions we have. Where do you see URC stock heading to? From Arvin. Well, Arvin, URC is currently into a consolidation range coming from its low base. It's really been trying to base out for a while. Oh, okay, I didn't see this earlier. Unfortunately, it broke down. So, and I think this is a very good learning lesson for everybody, right? I mean, it's taken so long, and even myself, I thought that this would one day generate a major base, only to find out that we have a crack like this into the effect. So this has perhaps the early time of Monday or Tuesday to try to rectify this problem. If we don't see this move back above 108 by Monday or Tuesday, unfortunately, a lot of people who are stuck here might decide to cut positions, and that might contribute more downside action for URC. So I would put a red alert on this right now, and if I don't see that recovery in 1 or 2 days' time, that might be clues for us that we may have to be able to pull the plug on this a little bit more. I mean, this is not the type of movement you want to see at this stage, especially after trying to generate a very big base. So please raise your defensiveness here. Next question, we have thoughts on dividend investing, pros and cons. Okay, so we're getting a little bit out of technical analysis, but okay, I think dividend investing is something that you should couple with your trading technique. So if you're a fundamentalist, and of course, clearly you want to buy stocks that have value, this is a bonus, right? If you get good dividends coming out from the stocks that you have, it just adds up, because if you get a dividend of 1 to 3 or even 5% in the company you're doing, then that's a bonus to whatever you realize in any capital appreciation that you get. So clearly, I'm all for it. However, I will not just buy a stock purely for its dividend. Okay, so like I said, you have to couple that with something else. So it's dividend investing to get that dividend, plus because you think it will appreciate in value, or because you also see that there is a technical condition driving a need to buy it, right? So purely on its own, I would have to say maybe you want to be careful, because remember, if the stock might be giving you a dividend, but the downtrend very much is still in place, then the downtrend itself might wipe your dividend value out, right? So Michelle, put the two together. You want to be able to make sure that you get the dividends while seeing appreciation, or at least the potential for appreciation. Don't just buy it precisely on its own. For example, you have PLDT breaking out. right? And I think you have a PLDT cash dividend coming up any day now, this coming week, I believe, or anyway, just check to make sure. But if you have a cash dividend coming in, plus you had a recent breakout, so if you see a rebound of its reaction, it might be a good time for you to be able to position for that dividend, plus to be able to ride the breakout reaction swing that might climb back up later. So you marry the two. Or if you think that the value of PLDT is worth 5, 10% more or 20% more, then you buy it because of that and you add the dividend along. So that's the way you should think in terms of dividend investing. Don't just do it precisely only for the dividend because you could easily wipe that out. Where is the PSEi index or how you compare the performance to other Asian markets? Art. I guess I compared it earlier based on its performance in terms of how it's managed to be able to drive itself from the lows that we similarly made with other markets back in October, November. And from that point, I just simply estimated where we are today, calculated their performance since that time, and that's how I've managed to be able to run the comparative performance of the PSEi with other markets. But in terms of other Asian markets, we're also kind of in the middle, right? Because you do have the strong markets like what I showed you earlier on. We've got markets like those in Indonesia. We've got markets like Taiwan and Japan. All of them have been recently breaking their 1-year high. Some of them are being broken highs since 2020, but we've not done that yet. So clearly we're not amongst the leaders. We're somewhere in the middle. But we're clearly not off those ones showing things like China, like Hong Kong, like Thailand. Those are the weakest that I've looked. So that's how we run to compare. Next question, please. Can you speak a little bit about RRHI on short and midterm perspective? Okay, sure. I mean, let's have a look at the chart. Okay, so if we were to simply look at this amongst the categories that I showed you earlier on, right? So I'm just going to draw a downtrend line here. Okay, and a shorter version of that so that you can see that there was an attempted recovery here, which failed, generated a pattern and went back into a decline. Okay, so here's another example. So here's where a downtrend, just because a downtrend goes sideways, doesn't automatically mean that it will come up. You really have to wait for the breakout for that to be happening. In this case, maybe like a URC, it broke down, and that means you could continue, right? So in this particular case, unfortunately, I don't see any structural change in the decline. And until I see a key break, particularly if we see a break over maybe this would be over 37.70. That's about the only time perhaps that we might see a wider rally. And if this were to rally, it'll take time because the first rally will come back up to the first resistance, which is this. After that, you might see it pull back again. So it might take some time. And this is normally what happens. It takes time for a stock to bottom out. So unfortunately, this is one of the laggards, so I treat it as one until a reversal is shown. I will just stay off this until I see more interest and demand come back in this later on. Okay. Do we still have one more? Okay. So I think we reached the limit to the questions that were shot off today. Again, I'd like to say thank you to everyone. But before I leave, I'd like to be able to just head back in here because I'd like to be able to present to you some key takeaways that we've managed to be able to look for today. Number one, we like to be able to stay with rallying trends, and we will stay with them until it is called off. Because it's very hard to say that on you decide to be able to take your profit, that will be the top of a stock. There has to be some rule-based evidence that you will use to pull yourselves off it. It could be because the stock is overbought. It could be because it's breaking clear support. Those should be the reasons why you're liquidating your stock, right? So stay with the trends until you see a clear validation that those trends are no longer in place. Number two, in our market today, you have to stay your aggression. Stay your aggression means to do not be aggressive because we've seen signs of increased corrective volatility, which asks us to do some top slicing. Now, top slicing, another word of profit taking. And the reason is because we've hit this essential crossroads, which we came, our high was about 7,021. And that's very near the 7,100 resistance that we've managed to be able to condition many of you to be able to anticipate. And because of such extended swings and such increased volatility, there are greater signs of such pullbacks in place. Today, we saw greater chances of it coming with the heaviness of the weight we saw in the correction. So I think that pretty much just puts more in light of what I was warning against. And this the job of this top slicing is to take advantage of prices being overbought or spot cracks. And it doesn't mean that you have to empty your coffers. I just want you to be able to raise some cash so that you can use that and have some cash after corrections to buy your favorite issues all over again. Right? That's the whole objective here. Number three, stay focused on stocks showing stronger trend phases. So when we say that, I mean, when you're looking for buybacks down the road, you want to be able to make sure that the issues you're looking to buy back are going to be participated by the rest of the public. And unfortunately, we're not in a runaway bull market yet where volumes are very big, every issue moves at the same time, or everything goes up at the same time as well. We're not there yet. We're in the beginning of a bull market. It's still relatively quiet. There are a lot of people who don't believe that's happening just yet. And so when you have a lot of this in place, the way the market will move is we will do it little by little, piece by piece. This is why we have rotation, because the market is not funded, in such a way that every institutional or retail investor is all buying at the same time. There are varying opinions on the market still today. All right, so my focus for you is you stay focused on quality issues and you stay focused on those issues that are resilient, because after this correction, they will be the first to be able to move. It cannot be a broad-based, everything will go up all at the same time. That's not at this stage of the bullish market yet. And finally, please stay tuned that 7,100 and 7,500 remains our targets after these corrections as well. So don't get scared through these corrections that you're going to see or these consolidations. Remember, we want to use this as opportunities to buy back or get into stocks we haven't bought yet at better prices so that these openings can make our targets more attractive for us. Because if you were buying the index at 6.9 and your upside is 7,100, that's very, very small. But if your market goes back down to 6,600 and at least it goes back to 7,100, and at least it becomes quite alluring for you. So don't get scared of corrections. Take advantage of them. These are opportunities that were being given into the short term to re-enter positions, or for those who have not yet, to be able to buy back once you see those prices. So I leave these takeaways to you, and I hope that you can take advantage of many of them. And again, please stay tuned to any other of the technical publications that we give, our Tech Spotlight. I will try to put more updates as I see prices move into the next coming weeks, because I'm sure volatility will come, and I hope to be able to spotlight any other issues that might look interesting for you. So with that, I'd like to be able to say thank you again for participating in our talk today. And again, just keep wary. These are timely periods in the market. So it came out just perfect that the market decided to whip back in the day we decided to do this. And at least you're now one step further informed to prepare for what may happen into the short term and take advantage of it. So with that, I'd like to bid you farewell. Enjoy your weekend. And I'll leave you some materials here to read. I'll send this to all of you so that you can go through this at your own leisure. Thank you very much and have a good day, everyone.